Hey guys, welcome to Thursday, the 7th of April 2022. And we've had our Fed minutes last night from Jerome. So, really, interpretation was hawkish. The balance sheet runoff is to commence in May. So, we're looking at, I think it's 60 billion in treasuries and 40 or 35 billion in MBS. So, what does this equate to? Well, really, what I was talking about yesterday was, there's a couple of questions in the room from one or two of the guys about, how should we perceive this? How is the market going to take this? And really, I think a lot of this is priced in. Something that came out last night was the Fed would have actually hiked 50 basis points at their last meeting were it not for the invasion of Ukraine. And so quite hawkish rhetoric there from the FOMC. But, it's largely priced in that they are going to be doing 50 basis points hike, 50 at a clip at several meetings this year. So it's a little bit naive of us as traders to be shocked or surprised by, that in itself. Basically my answer yesterday, how I'm looking at this is a lot of it's priced in, and the trade really isn't what you get on the evening, out of the markets. It's more, the longer tail of how the markets price this in over the course of the rest of the week, coming into the following weekend from a statement. So anyway, look, we've seen a lot of downside on equities yesterday. I think it really started on Tuesday from the rhetoric that we were getting out of the EU to increase the sanctions on Russian oil, gas, and coal. That's a big deal. Dollar on the rise, new highs on day in the background here. That's a really big deal, and it's going to have large echoing effects onto the food basket, onto consumer prices everywhere. It's actually going to have probably it's going to hurt Europeans just as much as it's going to. Well, let's maybe not just as much as it's going to hurt the Russians, but certainly it is a very stiff strategic move. The US did this to Iraqis back. I think it was 2003 or four. And a lot of people would say that this had really large shock implications to the Iraqi economy. Iran sanctions as well on oil and gas has really crippled their economy as well. So it's a bit of a decimation of the Russian economy should they now go forward with these sanctions scheduled for May. So not only do we have the balance sheet runoff in the US, but then we have these sanctions kicking in on oil, gas, and coal in Russia. Anyway, let's step back from the macro here and get into more on the micro. So looking over at the main markets here, the one thing I want to look at, the main barometer, is the Dixie Euro currency indices. So here's the Dixie indice now trading up quite strong in this sort of pattern. That pullback on 97.69, I was telling the guys in New Squawk, do go and check them out. Click the link in the comment or in the description below to check them out and get your free 2-week trial. But we were talking about this 97.69s level, and three times we tested down on this level. What is it? Well, it's this high, double tap high back from the 2018, basically the 2018 high, double tap 97.69s. You can see here, 1, 2, 3 occasions we traded there. Just really on the second occasion, just came shy of it, but lovely bottom on the dollar there to be then short the euro, long dollar, and we're up we go. Destination on the upside is going to be this historical level 100.38. I don't really see this market pulling up the reins until then, and above there you're into 102s. So parity on the way for the euro, I think, and this is certainly something the ECB have been talking about. Maybe we'll just get the euro Dozzy whatever, we'll just trade one currency between the US and the euro, maybe. But I don't think that's going to happen. But if anything's going to replace the dollar, it should be the euro. A lot of people will a lot of Brexiters would not like to hear that. Anyway, here is the Dixie. Let's get rid of that. Right, you're seeing the euro getting absolutely crushed over this right now, and so this is the euro on the weekly bars, and you can see I'm going to take this trend off because it's firmly broken now at this point. Destination to the downside is going to be the low of the week of the 23rd of March 2020. That is one spot 08775s on the M22, your June 22 contract, back adjusted, of course. Below there, you got the low of the week of the 7th of March this year at one spot 08435s. Now, do I see that breaking? I think I actually do. I actually do see that breaking this year to the downside. And as much as I don't want to talk about that because I live in the Eurozone and spend euros, I'm getting inflation runaway, and everyone's getting that all around the world right now. Material costs are going through the roof, and the dollar is wrecking everybody's buzz. So, yeah, I mean, euro further declines in store here. All right, looking around the equities picture, you can see the DAX trying to make a bit of a run to the upside here. Nasdaq last night, just getting into this lovely line in the sand area here, 14,370s, spot 75 up to 14,437s. Nice little line in the sand. You can see here this morning, 5 a.m. For those of you who are trading at 5 a.m. Lovely support running up to the 50 EMA here on Nasdaq. We should now continue. In my mind, we should continue on this Nasdaq to get a bit more relief to the upside, notwithstanding headline risk, of course. Obviously, a bit of a juice into the Nasdaq on Monday from Elon declaring his 9.6% or 9.8% holding of Twitter. Then the following day, he's announced on the board. So really, the like Twitter was up about 8 or 9% pre-market on Tuesday, but couldn't really do much to hold the Nasdaq. It's not really a big constituent. So yeah, fine. It was up 25% on the market on Monday, but only being up 10% pre-market and then settling around 4% up on Tuesday was just not enough to save this indice from slipping off to the downside. Anyway, we're in a bit of recovery mode at the moment post FOMC. You see a lot of this volatility here on the tape from last night, settling around the 50 EMA. For me, gun to my head, I'm long this market back to the 14.810s, and you know what? I'm actually long this market for the next 10 years. Just keep tearing into it. That's what I say. Bit of Sam North mindset there, but I mean, tech, fine. You got weak periods, but it's how can you be selling tech? I mean, how can you be selling tech? Another one is, how can you be selling the SPOOs? There's one thing, there's not many shorties in the trading world, but there's one thing is that holding shorts on the S&P is never a good thing, and it's never worked out as a trade, right? Never, ever. So, gun to my head, look, I'm long this market too. I think by the summertime we are going to be end of the summer we could be pushing into new all-time highs. Recessionistas are everywhere around the corner these days at the moment. So, look, they're always going to be there. People talking down the markets for whatever reasons, but sure, I think we've had a decent pullback. We have had a decent pullback. Can we go any lower? I hear you ask. Looking out on the weeklies here on the SPOOs, yeah, I think we can go lower. I think we can go lower to find, but the lower we go, basically, the greater the push back up is going to be. So if we can find buyers 44.76 and 3/4 today, I think we're definitely going to trade 45.25s, and you're going to probably trade into resistance 45.64s. Now, weekly bars here. Let's go back on the dailies and have a look. So you're generally finding support on the 100 EMA, the 44.56 3/4. And this support area, 44.76, last night got decimated down over the FOMC minutes. But I think we can manage to retrace back on up. I'd be very surprised if we manage to hold resistance at 44.76, which we're just trading a little bit above right now for the SPOOs. Let's see on the Dow. Yesterday, Ian doing quite well, doing his trades on the Dow yesterday. I just lost my Dow. There we go. So you can see, don't mind the gap down here. This is a data issue, but yeah, looking on the dailies, you see that support coming in just above the 200 EMA, 237s this morning at about 6 a.m. We're holding this general line in the sand. I think we're got to trade 34,573s. I'm at the moment, I don't see us auctioning down, notwithstanding headline risk. We're trading on the 50 EMA currently at market, so I'll just put that one on right there. Confident with pivot on the session. I mean, it's a very tricky area to call. I'm just really going to kind of sit in my hands and see what we get out of the day leading up into the open, and then see what's come across the bow on the headlines at that point. Oil, we've been talking about oil. Really, really nice trading to be had on oil yesterday. Let's see, what do we have? We had on the tops. On the tops up here, it's just very weak below 104.69s. We had some good areas to get in here. 102.40s, I think, was a nice area to get involved. Just this little bit of an area here. A few of us on the shorts, holding down through the close. Parwiz taking some serious scalps on this market yesterday. Well done, Parwiz. I only took like about half of this. I just didn't really have the time to go wading through till the close. But down to the 99s, which we were talking about, down to the 97s, 78s we were talking about. Didn't quite get the 94s, but it's in the post. We're on the way. I think, look, the floor on this market at the moment is around 89, 89s, confident with the 100 EMA. So I think, that's where we're headed today. I don't want to really tout anything further than that at this time. You see the dollar on the bottom right here also, holding a bid. Nat gas storage today as well. We're going to be covering that trade live in the room at the time. All right, so that's going to be it for me for another pre-US session. Please do click the link and subscribe and join us in the Discord room. Go to the Duggan Capital website and click on the Discord button. Okay, talk to you later. Have a good one. Bye-bye.